Hey there. So, if you've ever used QuickBooks, you probably know that feeling. You're looking at your bank feed, and wait, where did this money come from? It's not from a customer, so what do you do with it? Well, today we're going to solve that exact puzzle. Let's dive in. All right, let's kick things off with a scenario. Imagine this. You just got a tax refund from the government. Sweet. Your first thought is probably, awesome, more income. And you log it as a sale. I mean, money came into the business, right? Well, not so fast. That's actually a really common mistake, and trust me, it can create some major headaches for you later on. And that really gets to the heart of the problem, doesn't it? We've got this mystery money just popping up in our bank accounts. It's not tied to an invoice, it's not a payment for a sales receipt, but it's cash. It's real. So the big question is, what in the world do we do with it? How do we book it correctly? This kind of stuff happens all the time. We're talking about all sorts of things, like getting a refund from a supplier, or maybe some cash back. There's that tax refund we just talked about. Or maybe you, the owner, put some of your own cash into the business. Heck, it could even be the money you got from a bank loan. And you know what they all have in common? Not a single one of them is a sale. And here's why this matters so much. If you just go and record all of that as sales, you're going to artificially inflate your income. And you know what that means? A bigger tax bill. No thank you. So what's the fix? Well, thankfully, QuickBooks isn't going to leave us hanging. It has the perfect tool for this exact job. It's called the bank deposit transaction. So what exactly is this thing? To put it really simply, the bank deposit transaction is your way of telling QuickBooks, hey, I got some money, but hold on, it's not from a sale. It's the tool you use to categorize all that other money that comes in, so you don't completely wreck your sales reports. Okay, let's break this down, because the difference is super important. On one hand, you've got a sales receipt. That's your bread and butter. It's for customer sales. Its whole job is to record income, and yep, it directly hits your taxable income. But on the other hand, you have the bank deposit. Think of it as the catch-all for everything else. Its job isn't to record income, but to put the money in the right bucket. So a loan, that's a liability. A refund from a supplier, that just reduces an expense. It's all about using the right tool for the job. All right, enough theory. Theory's great, but let's get our hands dirty and see how this actually works in the real world. We're going to walk through a super common example. You just got a business loan and the cash just hit your account. How do you record it? Let's go through it step by step. Okay, you ready? Here we go. First, you're going to click that big plus new button and select bank deposit. Easy. Then make sure you pick the right bank account and the correct date. Next up, in that Add Funds section, you'll type in who you got the money from. In this case, your lender. Now pay attention, because step 4 is where the magic really happens. Under the account column, you are not going to pick an income account. Nope. Instead, you're going to find a liability account, something like loan payable. This is the key. This is you telling QuickBooks, hey, I got this money, but it's not mine to keep. I have to pay it back. Then you pop in the amount, and this last part is absolutely critical. You have to set the tax code to out of scope. A loan is not income, so it's not taxable. And that's it. You just save and close. See? Not so scary? All right, you've mastered the basics. Ready to level up a bit? Let's talk about those, not so great days. You know the ones. The days where you actually give back more money in refunds than you made in sales. Suddenly, you're looking at a negative number for your daily deposit, and that can look, well, pretty scary in your accounting software. Just look at this poor retailer's day. I mean, ouch. They managed to make $100 in sales, but then had to process $250 in returns. So once you do all the math with the sales tax, they're actually in the red for the day. Their deposit isn't a deposit at all. It's a negative number. So there it is, staring you in the face, a negative deposit. Negative $169.50. And you're thinking, how on earth do I record a negative deposit? It feels like it should break the system, right? But believe it or not, the answer is way simpler than you think. And the solution is, you use the exact same tool we've been talking about this whole time, the bank deposit transaction. Yeah, really. QuickBooks is actually built to handle this. All you do is enter your sales on one line as a positive number, and then you enter the returns on another line as a negative number. The system does the math for you and correctly records that negative total. It just works. Pretty cool, huh? So you might be thinking, okay, why are we spending so much time on this one little feature? And the reason is it's a really big deal. Getting this right is absolutely fundamental to having books you can actually trust. And if you get it wrong, well, there are some pretty serious consequences for your business. I mean, look, if you mess this up, it creates a total domino effect of problems. For starters, your sales reports are just wrong instantly. Then your profit and loss statement gets all skewed, and it might make you think you're doing way better than you actually are. And here's the real kicker. You could end up reporting the wrong amount of taxable income, and that might mean you're overpaying in taxes. Seriously, learning how to do this one thing right will save both you and your accountant a giant headache. And that's really the whole point, isn't it? This quote here just nails it. The whole reason the bank deposit feature exists is to draw a bright, clear line between your actual sales income and all that other money that flows into your business. It's all about keeping things separate and tidy so everything stays in its proper lane. So I want to leave you with a challenge. Go on, open up your QuickBooks. Take a look at your bank feed. Now that you know what to look for, do you see any of that mystery money lurking in there? I bet you do. And now you know exactly what to do about it. You've got the right tool for the job, so go on, get those books cleaned up.